Welcome to Concept Craft. We are presenting step-by-step videos training to crack your certification exam, so you can gain the confidence to take on any accounting challenge. Now let's begin our today's lesson. Using bank rules. Learning outcomes. In this lesson, we'll cover using bank rules in QuickBooks Online. Topics: how QuickBooks Online applies rules. Reviewing transactions with rules. How to create a bank rule for transfers. Using rules compared to using recurring transactions. Understanding automation. QuickBooks Online allows clients to set bank rules to speed up the matching process. However, unless clients use the auto-add feature, they still need to review the matches with the rules applied. Besides, at times, clients may find that some rules are overwritten, or they inadvertently create rules that lead to duplicate transactions in the bank feed. How can you and QuickBooks Online help? As a pro advisor, you can help clients avoid mistakes with bank rules by explaining how QuickBooks Online applies rules and what they should do when a rule is applied. In this lesson, we also cover how you could use rules for transfers and how they compare with recurring transactions. To ensure you get the most out of this lesson, we recommend you work through the one on creating a bank rule first. How QuickBooks Online applies rules. Rules apply to unaccepted transactions only, transactions in the For Review tab on the banking screen. For transactions in the For Review tab, QuickBooks Online first looks to see if the transaction is already recorded. If so, it suggests a match. If there is no match, it then runs each transaction through the list of rules on the rules list to determine if any are applicable. It only applies one rule per bank activity, and it uses the following logic when determining which rule to apply. Rules are applied in numerical order as listed on the rules list. The first rule that fits a bank activity, that is, where the transaction meets those rule conditions, is the one that QuickBooks Online applies. To change the order in which rules are applied, use the grip icons to drag them up or down. A transaction will be flagged for review if it meets the bank rule conditions. You or the client can then decide whether to tell QuickBooks Online to execute the rule actions. If QuickBooks Online runs a transaction through each rule and still doesn't know how to categorize a transaction, it'll try to give it a category based on past transactions or the customer/vendor name. These transactions will be labeled as an uncategorized income/expense/asset, as appropriate. Reviewing transactions with rules. Unless your client has turned on the auto-add feature, they'll need to review the transactions that QuickBooks Online applied a bank rule to. The client can then instruct QuickBooks Online to carry out the specified actions for that rule, for example, categorize and/or reclassify the transaction. To do this, open the For Review tab in the Banking Center and select Recognize from the All Transactions drop-down. This lists all transactions recognized by a bank rule and/or that match an existing transaction in QuickBooks Online. Transactions recognized by a rule will be marked with a rule label, as you can see here. If everything looks good, select Add in the Actions column to move the transactions directly into an account in QuickBooks Online. Clients can also select and review each transaction before they move it. How to create a bank rule for transfers. Now let's put this into practice and create a bank rule to record transfers between accounts automatically. This task can confuse clients, and they sometimes make simple mistakes such as posting one or both sides of the transfer to an income or expense account. They can also unwittingly create duplicate transfers. Note that you should only create the rule for one account, and it doesn't matter which one. If you create a rule for both accounts, the client will end up with duplicate transactions. Select the headers to reveal how to create the rule and how it works. Create the rule. How the rule works. Create the rule. First, determine which account you're going to create the rule for, and look for a unique identifier in the bank's description of the transfer. Typically, you'll see words such as transfer out and transfer in, or XFR out and XFR in, along with all or part of the account number. You'll use this information to tell QuickBooks Online which transactions to look for. For this example, we want to record transfers between the savings and checking accounts automatically, using a unique identifier in the bank text as the search criterion, so we'll set up the rule as follows. When you save the rule, QuickBooks Online adds it to the rules list. How the rule works. Now let's see what happens when a money out transaction with bank text that contains part of the checking account number downloads from the client's savings account. As you saw above, QuickBooks Online follows the logic explained earlier to match/categorize the transaction. Because you set up the bank rule to look for transactions that meet the specified conditions, QuickBooks Online applies it here. It'll automatically add the transaction to the savings account and categorize it against the checking account. Here, you can see the transaction in the For Review tab of the savings account. When you look at the checking account, the other side of the transaction will match. Using rules compared to using recurring transactions. Rules share some similarities to recurring transactions in QuickBooks Online, as you can discover in the lesson on creating and using recurring transactions. As a result, there are many situations when clients can use either feature to achieve their needs. For example, clients can use recurring transactions to enter routine expenses like mobile phone or utility bills. However, it's usually better to use banking rules because they take into account variations in dollar amount and date. This is easier than fixing amounts and dates on scheduled recurring transactions or checking for and editing reminder transactions. If your client used both recurring transactions and banking rules for the same transaction, you or they would have to check for and delete duplicates resulting from the recurring transactions. When would using a recurring transaction be the better choice? Here are a couple of situations where it would be better to use recurring transactions than banking rules. A client wants to create reminders to invoice a customer regularly but for varying items/amounts/descriptions. In this case, recurring invoices can also be set up to include any unbilled charges to the customer. This is a feature that bank rules don't offer. However, if the items/amounts/descriptions won't vary, use a scheduled recurring transaction instead. A client processes a transaction for the same dollar amount at the same interval. However, if there's going to be any variation in dollar amount, such as a mobile phone bill, which can vary if extra charges or rate changes happen, you should use a rule. Summing up. Learning outcomes. Well done. In this lesson, we covered using bank rules in QuickBooks Online. Knowledge recap. While using bank rules can make things easier, clients need to be aware that rules are applied in sequential order and, unless they use the auto-add function, they still need to be reviewed in the banking center. Next steps. In the next lesson, we'll cover setting up and using templates to create recurring transactions.